All right, good morning, good evening, good night. It's another episode of the Layer 1 podcast. We're coming at you with the latest in the crypto industry, some of the best founders in the space. Co-founder here that I have with me. We have Sasa Milic from API3. This is going to be a great conversation, and this is one of the only conversations I've had with CoinGecko up on my left-hand side at the same time. So I won't be paying too much attention to that, Sasha. You have my attention here. We're going to talk all things API3. How are you doing today?
I'm doing really good, actually. I don't have CoinGecko up. I haven't even looked at it today.
Okay, that's a good thing, I think. So we're going to talk all things decentralized APIs. We're going to talk oracles. When I first took this interview, I knew I was going to be a little bit out of my depth, if you will. So please just deal with my incompetence a little bit as we go through the episode. But I'm excited to get this started. It looks like we have some people in chat as well. We are ready to roll. So before we hop into APIs and everything you guys are doing at API3, how long have you been in the space? Take me through your background as, you got into crypto.
Yeah, it's funny because I feel like when I listen to these kinds of interviews, people are like, oh, I've been in the Bitcoin space for 10 years or something. But like, I haven't been in the space for very long. I read about Bitcoin and I heard about it for a long time because I was in computer science in Toronto, which had like a big crypto scene, but I wasn't really paying attention. So I read the Bitcoin white paper 2017, 2018. Thought it was super cool and then just kind of forgot about it. And then early 2019, which was like the depths of the last bear market, I looked at the ETH chart and like, man, I got into this like right in the bear market. And it was when I moved to New York by myself, and a bunch of my social circle ended up being a bunch of crypto people. And shout outs to Crypto NYC. It's this meetup group where like every Wednesday we just talk about a white paper, and it was like super nerdy, and everyone was so great. And I loved the content as well as just the people that were like into crypto in the bear market. The people that are into crypto in the bear market are very cool. So that's how I got into crypto. It's like a kind of like simultaneously the tech was cool and the community was cool. And you said a bit about my background, like before crypto.
Yeah, take me through
Okay,
that.
yeah. So I studied, my undergrad was in computer science and statistics. I did a master's and I started a PhD, which I quit after like 8 months. So I thought I was going the academic route. I was thinking, yeah, I'd be an academic. That was my plan.
Yeah.
Was not really impressed with academia, to put it briefly, and worked as a software engineer, data scientist in Toronto, and moved to New York. I lived there for a year, like right before Corona started. I was in New York at Facebook as a software developer. And through my social circle, I actually ended up sort of like consulting and stuff for crypto projects, like super like casually, like everything in crypto is kind of casual, like and then I met with the API3 guys. Well, they were working on a different project before called CLCG, the Chainlink Consulting Group, and they were working on bootstrapping the Chainlink ecosystem by working with API providers and figuring out, well, if there's going to be like independent nodes in the Chainlink network, how do they connect with APIs? Just because like API subscriptions are not cheap, especially for some like premium data sources, and it's not really clear from a business perspective, like an independent node operator, do they subscribe to a bunch of APIs and wait for demand? Or do they like wait for demand and subscribe to APIs? Like there's a big kind of business problem, sort of like a business problem there. And they're working on getting per call subscription rates. So normally APIs are like monthly subscriptions or yearly subscriptions. Well, it depends. But they were trying to get it like a per call. They were talking to APIs to try to get like a per call kind of business model for nodes. And they're working on other things like an approach to Sybil attack resistance. Like they were working on like sort of the problems in the Chainlink ecosystem. Like how do we bootstrap the ecosystem? So they were really interested in the Oracle problem. I was too. Just I think it's super neat what we can do if we can get really good data on chain. And then I was kind of similar to them. We both were kind of disillusioned with some of the solutions in the space independently, me from consulting, them from working on this project. And I approached them because I'd read their work, and I was like, this is like some of the best stuff I've read about the Oracle space, like what they were doing with the kind of ecosystem project. And I started talking to Burak, who's one of the co-founders, and we like immediately agreed with what the problems we were seeing. And he DM'd me on Telegram the next day and asked me to work on the white paper. And that's how it happened.
Wow. So I don't want to put the cart before the horse with our oracles and APIs. I think most of us have a general understanding maybe of APIs and decentralized oracles from Chainlink, as you just mentioned. So we're going to get into kind of the general overview of what that is for someone that's maybe uninitiated. But just off that story, at what point did Burak think, okay, I need to actually move outside of the Chainlink ecosystem? Because you could have done a lot of work probably within Chainlink itself, I'm guessing, correct?
Yeah, we should have gotten, me and Burak actually did one interview together. I feel like maybe we should do that again. Let me try to remember when exactly. I think they realized that independent node operators wasn't going to be a thing anywhere in the near future. They were making an ecosystem to help people that wanted to just spin up a Chainlink node and provide data. But Chainlink has been pretty slow with releasing crypto economic security like staking, which is necessary if you're going to actually have independent nodes in your ecosystem. And they're building they were building a product that it wasn't just the API subscription stuff. They had like at least three different products within CLCG that were meant to like bootstrap the ecosystem by helping independent node operators. And I think they realized like independent node operators in the Chainlink ecosystem isn't happening anytime soon.
So you technically need to implement staking to have independent node operators, essentially, is what you're saying?
Yeah, I mean, like this is right now, it's you just trust their kind of permissioned set of nodes. You can't, like the thing with independent node operators, that means they're pretty much anonymous for the most part. Like if you're spinning up a node, it's just you and your IP address, like no one knows who you are. So there has to be some sort of like stake. So there has to be something that incentivizes you to tell the truth and that punishes you when you don't. That all needs to be implemented if you want a permissionless network.
Yeah, stake in the game, if you will, pun intended. Yes. and all. All right, so with, again, not putting the cart before the horse, someone that's super uninitiated to this, what is the importance of oracles? Maybe they haven't heard of Chainlink and what you guys do at API3. What is the importance of oracles? What is the importance of decentralized APIs from a really general standpoint? And then we'll make our way deeper.
Okay. You'd think I'd be able to rattle off an answer since I get asked it all the time, but I'm always trying to like tailor it for the audience. So if you really don't know what an oracle is at all, okay. So the blockchain network. So let's say like Bitcoin. Because it's decentralized, every single node in the network has to be able to validate transactions. And that means in Bitcoin, so like it's a bit simpler than Ethereum, although Ethereum is just a little bit more generalized. But in Bitcoin, you have to make sure that you actually have money in your account if you're going to send it. So like you submit a transaction, I'm going to send you 1 Bitcoin. The miners, when that's sent to the network, all the miners, validators, I'm using them interchangeably, they have to make sure that you actually have a Bitcoin in your account before that transaction gets added to a block. So that's what validation means. So because it's decentralized, anyone can validate. Everyone should be able to validate a transaction, and that means that everyone has to have access to the same data, right? And that the data on the blockchain is just, here's my address and here's the data in my address. And in Bitcoin, that's literally, well, in Bitcoin, it's a little bit different than Ethereum. I feel like some maxis might criticize my just, anyways, it's essentially like you have an account and you have like data in that account, and that data usually, especially in Ethereum, is like, I own this token, and that's it for the most part. And if you actually want to get, and that's why I think, and not just me, other people think that cryptocurrency is what we see, because that's the data on the blockchain. It's like ownership. I own a token, and then like what kind of applications can we build with that, like moving tokens around. But if you can get other data on the blockchain, then you can like utilize the blockchain. Why the blockchain is important is because it allows a trustless interaction. Like you don't have to go through like an escrow. Like if that's common with like business transactions, you don't trust each other. Like I should I send you money first before you send me a product, or do you send me the product before I send you the money? Like that's a lot of business is basically that, like who sends who the thing first. So escrow, there's like third parties that make money by just holding money in escrow. That's just an example. So with blockchain, you can just interact directly. It's peer-to-peer. Like we can just do business together and we don't have to trust each other because the blockchain takes care of that trust. The blockchain can be used for so many different things. Like I said, like escrow stuff, law stuff, insurance, dispute resolution, like things that go beyond just finance and financial instruments. But the thing is, all of these applications require data on chain that isn't natively on chain. So it's kind of a long explanation, but if we want to make really cool peer-to-peer business contracts, you need data on chain, you need data securely on chain, but the way that the blockchain works natively, it doesn't have access to outside data for security reasons. It's not a problem with the blockchain. It's like, in order to have this incredible security guarantee that something like Bitcoin and Ethereum does, it's like it can't really interact with other networks because they can potentially interfere with it. So it's isolated for security reasons, but that isolation prevents you from making like really cool applications using blockchain and decentralized consensus.
Yeah, I think you were mentioning on another interview, and it really hit home. It's like things like even the Ethereum price on centralized exchanges, those are all off chain, and it's off chain for security reasons. But it's just funny to hear that, right? The Ethereum price, the thing that drives most of what we're doing, is off chain. Yeah,
it's such like a interesting, almost like poetic thing. I don't know.
Yeah.
It's very paradoxical.
Yeah, so just kind of staying within the general concept, you guys are providing like the plumbing and infrastructure for people to just do things on chain with a lot of the assets. If I'm sending one asset to someone else, a lot of this is financially driven. So data price feeds and all these things are super important, but we don't think about it on a day-to-day. It just happens and we're like, okay, yeah, perfect. But you guys are the ones behind the scenes doing that. So how does the business model work? You mentioned subscriptions early on. How does the API3 business model work for people that maybe want to get involved in your community or staking or things like that? As we make our way into the episode, we'll talk about staking. But just in general, how do these decentralized Oracle companies work from a business standpoint?
Well, first, I should be clear that like our data feeds aren't live yet. Like we're currently in audit for several of our contracts. So I can't speak about, like I'm talking about like what's going to happen once the contracts are live.
Yeah.
But so I guess your question is, how do Oracle networks in general make money? Is that the idea?
Yeah, I think for most people, they can't step behind the curtain, and it's just like almost too complex of a thing. Yeah. Like we have NFT projects on here. We have like layer ones. Those are generally understood, but I feel like once you start talking about oracles and decentralized APIs, people are like, well, what am I getting involved with here? And I think that's not the right sentiment to have, but they have to have an understanding of how that works in general.
Yeah. So simplistically, maybe I don't understand your question, but simplistically, when you request data from an Oracle, like when a smart contract, let's say, I always use this example, but I think it's really simple for people to understand. Like a flight insurance contract is essentially a really easy piece of code that says, if I buy insurance for my flight in case it's late or canceled. And then, there's a piece of code that says, well, there's a theoretical smart contract would be like, if my flight is late, give me back my money. Otherwise, don't. Like that's a really simple piece of code. But the hard part is like, how do you get that data, and how do you get that data securely so that if someone lies, you're not going to get your money back, right? Like if you're getting data from a faulty Oracle talking about flight information, and if they lie, that means, they can control who gets the money. So the code is really simple. The hard part is like, how do you get trusted data on chain? Right. So my point back to like money or how you pay for these things. It's like anytime you request data from an Oracle, you pay. Like that's kind of that's the simple explanation of the business model. Like if you're requesting data from an Oracle, you should be paying them.
And the people that are requesting are actually the dApps or the apps themselves. Like the users are the apps, and then the user is pretty much obfuscated from all of that stuff.
Yeah. What do you mean by the user? Like the user of a DApp?
Like someone that is actually having, I guess, insurance on that flight situation. Like I don't necessarily, that doesn't come into play with me when I just know that I'm getting my money back if this happens.
Oh, yeah, yeah. Yeah, so this is behind the
Okay.
scenes back end stuff. So for example, a lot of stable coin projects. So for people that don't know, stable coins are just things that are like pegged usually to the USD. And ones that are like algorithmic stable coins, like something like Liquidity, it's just something I was looking at recently. They need like, I don't even know how often, but pretty much Oracle updates as frequently as possible. Like what's the price of ETH and USD? They need that in their system like constantly in order to like uh, basically it's required information in order for the peg to exist. Like
Got it.
you can't have a stable coin unless you're constantly getting updates about what's the price of your collateral in USD. Like you
Mhm.
need that information at a consistent, like constantly.
Yeah, that makes perfect sense. I think it would be cool to kind of walk through maybe times, and even outside of blockchain, outside of crypto, times APIs have failed, and those have kind of led to like catastrophic incidents. I think maybe some of us know about some of the exploits or the Oracle failures. I might be terming those wrong in DeFi, and how a lot of those had lead to like a lot of stolen funds or what have you, or lost funds. What are some times that we maybe don't know as just general users of when APIs have failed, and those have led to like really bad situations?
Yeah, I feel I can go in so many different ways with that. So one reason why I haven't gotten into our solution yet, but we deal with directly with APIs, whereas a lot of like other Oracle networks, they deal with like third-party nodes that get data from somewhere, and a lot of the time you don't know where. So with our solution, if the API fails, you know it's the API. Whereas with a third-party solution, it's kind of like um, what's the word? You kind of mask that. Like if something fails, you don't really know what was it the data source that failed? Was it like a faulty node operator? Like
Yeah,
I don't know if that makes sense,
yeah.
but I wish I prepared a little bit better for this interview because I know of examples of Oracle failures that have happened, but I don't, correct me if I'm wrong, but I think was it Compound or was it Synthetics that had like a $10 million hack because of
I think it was
uh,
synthetics. Yeah,
okay, yeah, because I don't want to say something about a project that's not true. You know what I mean?
yeah, yeah.
Okay. But anyways, yeah, please check, fact check this audience. One of them, I guess you're saying Synthetics. Yeah, there was like I think they were using, um, if I'm thinking about the right project, they were using information from Coinbase, and someone actually manipulated the price. This is an API thing, I guess.
Yeah.
Someone manipulated the price on Coinbase for something that was a stable coin. And I think that they just assume that a stable coin doesn't really move past a certain like 20%, not even less than that range. And someone somehow manipulated that price that caused like a bunch of collateral to just get liquidated. And I think it was like $10 million.
Mm-hmm.
And this is like the most common sort of hack in DeFi is you manipulate a price to, because like I said, with stable coins, it's like you need a price constantly to make sure your coin's actually stable. And a lot of these DeFi projects, it's like you need to know outside prices in order to have your system to kind of work the right way. So like if you input incorrect prices, incorrect data, you like completely mess up the system. And that's the most, as far as I know, I think the most and probably the most expensive hack in DeFi is manipulating prices somehow, whether you're a faulty Oracle or whether you manipulate a price on an API, there's different ways to do this.
Got it. Okay, I want to dive deep into this conversation here, but the one awesome thing about the Layer 1 podcast is we're video on YouTube and audio on YouTube, as well as podcasting after the fact. So we're actually able to kind of comment along here with the chat. So I have one.
I'm not reading the chat.
I,
It's distracting.
no, no worries. I've got it for you. So I've got it pulled up.
Okay.
Pula is saying, so your airplane example, would the smart contract be able to retroactively get my money back, or didn't it just go into the blockchain as proof, or can I still have another action in queue? That might be a...
I don't really understand what that person's asking, but let me try to explain the example. Like you put it's sort of like a smart contract acts as an escrow. So like you put money in some contract for like let's say you want to pay for your flight. keep in mind the smart contract doesn't exist. I'm saying like theoretically
Yep.
how it would be written. Like you want to pay the airline company, but like that money goes into a smart contract, and only after some point, that maybe that's what the person's asking me. If the flight does happen and you get that information, that money, there's like a trigger and that money goes to the airline. They get the money. But if it's late and you get the information that it's late, it goes back to you. And there's so it's like the blockchain, the smart contract acts kind of like an escrow. That's not like a third party centralized escrow. It's like a distributed escrow.
Yeah, I think the last part is, can it still have another action in queue? Maybe that's saying, can there be multiple? But we'll hop off of that one. Appreciate all the comments that are coming through.
Yeah, thank you for your interest, guys. I really appreciate it.
Absolutely. So the point that you were kind of touching on there was DeFi, right? And price feeds are primarily what we think of when we're talking about, you know, your project and other decentralized APIs and oracles and all these things. What outside of price feeds are we going to see projects like API3 move into, and why is that important?
Honestly, I don't think anyone can truly conceptualize like what kind of applications and what kind of data you're gonna see in the space. Like I really think it's like limitless. But I keep mentioning insurance just because it seems like really obvious to me. Because like the code is really simple. It's an if-else statement. You know, if my flight was late, I get my money back. If it's not, I don't. And like most insurance is literally an if-else statement. If something happened,
yeah,
give me my, you know, claim. If it didn't. And what's crazy is, you know how like if anyone's actually dealt with an insurance company, how much of a pain in the ass it is and how many phone calls you need to make. And like it's not trivial to get a claim. But imagine if it was just like literally like 3 lines of code. And then the tricky part is like, how do you get data? And insurance, it could be so flight information for flight insurance, weather information for like flood insurance or something. What other kinds of insurance are there? Hedging, like financial hedging. That's price data. Do you have any examples of insurance off the top of your head?
This is not. You're the interviewee here. I don't want to be put on the spot.
I'm like, there's lots of.
Yeah.
I'm sure you guys can think. There's a lot. I was actually recently talking to a lawyer that worked at Lloyd's for 20 years, and he told me he worked on terrorism insurance, which I didn't even know was a thing. Like governments insuring monuments in case of terrorism. Okay,
got it.
So there's a lot of types of insurance out there, and the logic for insurance is simple, and it's an extremely complicated process out in the real world, and it can be made like mind-bogglingly much more simple
just by removing the intermediary, essentially.
Absolutely. Yeah.
Got it. Okay. All right, we're going to get into API3 here. And dive deep on what you guys are actually doing and how your features essentially are the ones that people that are dealing with decentralized APIs want to get involved in staking and all of these things. They want to pick you. But days like today, we see the price action going absolutely bonkers over the last 24 hours. Shout out to everyone who's holding or who sold the top or what have you. But on days like today, does that put a lot of stress on Oracle systems, or is that a situation that can get really wonky?
Oh, that is such a good question. This sounds kind of evil, and it's not. It's just my curiosity. I was kind of really interested because obviously, like, there's gonna be a crash. Like, you have to be an idiot to think like something like this is not gonna crash. Mm-hmm. So I was actually interested in like what's gonna happen with all these really crazy DeFi protocols. Because it's not really it's weird because it's not really a black swan event because you can expect crypto to crash, but it's like, are these systems that deal with Oracle prices and whatnot, like will they handle the stress? And I don't know, like I don't think anyone really knows. And I think you already saw some. Someone sent me some stuff on Twitter about some Chainlink feed for some asset that's like has really low what's the word, trading volume or something. Like I can't remember. Yeah, liquidity. And that I didn't read what actually happened, but there was an issue with that. And I imagine like, so basically we're seeing these systems they're going to get really stressed, these DeFi systems with the price action right now. And I'm just kind of curious to see what survives.
Yeah, I don't have that financial background, but one of the guys on our channel.
I don't either.
Yeah.
So I should say this, like, Sorry, I didn't mean to interrupt you. One interesting thing about crypto is that it involves so much knowledge, like computer science, finance, math. Cryptography isn't computer science. Cryptography is like really advanced math. And no one knows everything about everything. Like everyone's kind of a noob in some way. And I knew nothing about finance. And literally like a year and a half ago, I just opened up a textbook on financial derivatives. It's like the most common textbook by Hull. And I just started reading. I'm like, I don't know enough to understand DeFi. So I just started reading about financial derivatives. And that's why I know, like, I don't have a finance background.
Yeah, I think crypto is this like weird meeting point of like the smartest people in the world, all in this multidisciplinary environment. It's absolutely bonkers, and that's why I love talking with people like you, because I get to learn a little bit. So I guess we got kind of lost there. I think no worries. I'm just trying to kind of recenter here. So yeah, I think that the DeFi price feeds and all these different things and the tranches that are stacking on top of each other, like there's super problems when you get less and less liquidity as you go up the totem pole there, and that can lead to some things.
But to be fair, we're a lot more anti-fragile than the traditional financial system. Like what was the crash in 2008, 2009? That was just like derivatives on mortgages. Like that was sufficient to crash the whole system. But like our system is, I think, doing much better.
That's a very good point. Okay, so let's jump into API3. We touched on kind of the overview of basically oracles and decentralized APIs, all of the stuff that we need to hit to kind of jump into the actual project. What do you guys do specifically that's maybe different from competitors, or if someone's interested in getting involved, what do we need to know?
Okay, so I think because there's a lot of aspects to our project, but I think the main thing is something called first-party oracles. So I think pretty much I would say all other oracles, networks, or projects in the space, they use something called third-party oracles. So these are like, essentially think of them like nodes in a network. They're like specialized nodes that can interact with, let's say, Ethereum, other chains too, but like just for simplicity, Ethereum. Sorry, what was your question? I just like blanked.
just API. I need to know what API3 does.
Okay.
You do have CoinGecko up, I guarantee it.
No, I don't. I swear I haven't. I haven't looked at CoinGecko once today. So most of these oracles like just query data from APIs and then transmit it to the blockchain. Like I guess I'll avoid a lot of details. It's basically these systems have intermediaries that go between an API and the blockchain, and it's completely unnecessary. Like it just creates security issues. It's costly. What we're doing is pretty much just like cutting out the fat, I guess, or like just get if you're already trusting an API to provide you data, just give them an oracle, like make them run an oracle. You're like leveraging the fact that you already trust the data source. Like why get another third party layer involved? That's the idea.
Yeah, absolutely. So if someone comes in, they want to be, you said it's not live yet. You guys are in the process of audit. They want to be a part of this ecosystem and provide, staking essentially. How does that function work, and how does that process work kind of all together?
Sorry, who did you say provides staking?
I would like to know how the process works. I know you mentioned in a couple interviews that staking is involved.
Okay. It's kind of, I would say the staking is a bit more complex than a lot of other systems. So the way that we provide, or we will provide, we are like partnering with a kind of decentralized insurance project. We're going to provide insurance. So in case there's an oracle failure, like you're insured up to a certain amount. And that just makes sense because it's really, really hard, if not impossible, to detect a faulty oracle or a faulty response from an oracle immediately when it happens, because you don't have any on-chain gold standard. Like how do you even check that something is correct because it's coming from outside? So we just think like we're focusing on minimizing the risk of anything faulty coming from an oracle, but then that's not sufficient. So it's like kind of take the remaining risk and ensure that. So we provide insurance for faulty oracle inputs. That means that we need an insurance pool, like that money has to come from somewhere. So staking, you stake in our insurance pool. And if we need to pay insurance, it comes out of there. But if our system is doing well, you're going to get the kind of you receive the inflationary rewards in order to kind of incentivize you to stake. So it's like staking, if you stake in our system, you participate in the risks and the rewards of the system. And also importantly, if you stake, you get a proportional amount of voting power because we're a DAO, or like we're a DAO currently, but we're launching like the official DAO as soon as audits are over. So that's, I really like this system. So this is actually designed by Burak, so I'm not taking credit. The idea is that people that are governing this project have direct incentive because their money is locked in the pool. They're going to get slashed, or they're going to, you know, do well. If this, it's like, I don't want to make it seem like you're going to get slashed if you participate in our system. I'm just saying, like, there's risks and rewards, and we're being very explicit about that. And that what kind of bothers me when I see all this like staking yield stuff online, as if like you can make infinite amounts of money by staking. And it's like, it's not. There's always risk involved, and we're trying to be kind of explicit about that. Like if you like the system, you want to participate in the system, you think it's going to be profitable in the future, you can stake, participate in governance and whatnot. And if you're participating in the governance, like voting proposals, that implies that you've actually staked your API3 inner staking pool, and you have skin in the game. You have direct skin in the game, which is so important for like governance.
Yeah. Yeah, I want to get into the DAO conversation. You mentioned ridiculously high APYs, and I know I have some Binance Smart Chain people here in the house, so I'm sure they're a little bit offended by that comment.
Oh, what are the comments? Are people getting mad in the comments?
No, you're completely fine. I just needed to throw that Binance dig in there. But okay, so talking about the DAO, it seems like on the website you guys are like DAO-ish right now, and you're going to formalize that process. What did that start off as, and what is the size of the community that's involved in the DAO look like right now? Kind of just give me a overview of that DAO.
So I'll just have to be like get a little technical to explain. Like DAOs don't just pop out of nowhere. It's not like a virgin birth, you know, like it has to be created. Mm-hmm. So like right now we're launching the official DAO, and the official DAO is the one where like you vote, your voting power is proportional to like what you stake, right? That's what's currently being audited and what's going to be released. But what we have now is essentially a multi-signature. So we have a treasury, partially from initial investors, and also from the token sale. So we have a treasury, and that's not controlled by any one of us. That's controlled by a team of people through a multi-signature. So that's the DAO presently. It's like the initial team with a multi-signature that controls the treasury. But and so we're building these DAO contracts, and once that's deployed, once the what we call the authoritative DAO, once that's deployed, the ownership of the treasury is now the DAO, and is controlled by, you know, majority votes.
Yeah, it seems like it's really early. Like how old's the project?
It's so early. I think we released the white paper, I think in September, and then we had a token sale end of November. Thank you for mentioning that. So like we've only been around for a couple months. We're building pretty rapidly, like making partnerships like extremely rapidly. Mm-hmm. And we were kind of lucky. Like we had our token sale kind of at the run up of the bull market. So in many ways, like we've benefited from that. But we get things in our Telegram like, oh man, we get a lot of like crazy things. Anyone that works in crypto does. But the other day, someone was like comparing us to Cardano. Like Cardano already has staking. I'm like, Cardano's been around since 2016 or 17.
Yeah.
I'm like, you can't compare our projects. So we've been around for a little while, but I think we've done like, I'm really happy with how it's been going so far.
Yeah, thank you for fudding Cardano here on the. I'm a huge. Listen, Cardano can go, you know, up a creek as far as I'm concerned. I'm not big on like the way that they're kind of approaching what they're doing.
Just to be clear, I don't have any kind of issue with Cardano. I was just giving the example. It's like you could have it's like comparing us to Ethereum or something. Yeah. You know, like you can't compare what we're doing to something that launched 5 years ago.
Agreed. I completely agree, and you guys are moving very quickly, especially on this DAO front. I feel like projects sometimes maybe wait a little longer to really formalize that DAO. What is that process? Go ahead.
Oh, sorry. I was going to add, like, I actually like the fact that it's a couple of months before the actual DAO is released. So we released the tokens, which a lot of people criticize. Like, oh, someone even made like a Twitter, like some prominent Twitter person, I don't know who, was like, oh, ICOs are back, relating to like our token launch in November, as if like it's a bad thing. But I think it gets the community going, because like you can't just launch a DAO and like no one's really on the same page. Like we're really trying to like kind of build up a community of people that are now, that are the token holders now. It's like, how do we kind of build up a community, get people on the same page, so that when the DAO is launched, everyone's on the same page. So I like the fact that we released a token before, a couple months before the official DAO is launched, just to get people on the same page.
Yeah, I completely agree with that. So I guess we'll talk about maybe the DAO a little bit more. I do want to touch on the API3 token. What is the model there for the token itself? I think it has to do with those inflationary rewards for staking. But what other kind of take me through the token?
And I'm not like bragging, but our tokenomics are kind of complex. Like it's not easy to explain, especially if someone's not at all familiar with crypto, and all they're just familiar with like dog coins. Like they're not going to understand. They're not going to understand something that has relatively complex tokenomics. But so inflationary rewards means that if you stake, we have inflation, but that inflation is paid out to stakers. So it's like, if you're staking, your money's not really getting inflated. You see what I mean? Like,
yeah,
because all the inflated tokens are given to the stakers, and that inflation rate is a floating rate that depends on how much money we need in the insurance pool. So we decide as a DAO, we vote, like, this is how much money we need in the insurance pool, and then increase or decrease inflation to sort of to influence the incentives about people staking or not staking.
How
So like
often does that vote occur?
Well, we'll see. It really, like, it's something like it's like a very like data sciencey thing. Like we have to see, like, when we tune these parameters, how quickly does the insurance pool get bigger? How quickly does it get smaller? Like I don't think it's going to be a big issue. It's just something that's going to need to be tweaked as we actually see the data.
Okay.
And then, so I'm not done with the tokenomics. So that's inflation stuff. And then also all revenue is burned. So if you're a DApp and you subscribe to our data feed, or you get data from one of these air nodes, one of our oracles, like you pay for that, like you pay a subscription rate, and that is burned. So it's very similar to EIP 50 and 59. I don't know if people in the audience are familiar with, but it's a similar kind of mechanism. So the more our product is being used, the more tokens are burned, which usually has a positive effect on the price. I mean, it's just the mechanisms of burning.
So the revenue is given to you. Is this happen automatically, or is the revenue sent to the team and then the tokens are rebought and then burned, or how does the burning?
Yeah, that's a good question. I don't think it's actually I don't think this part is actually implemented yet, but you could do it several different ways. So yeah, it could be implemented in several different ways.
Okay. So we have an awesome comment here. You're going to like this one. Ferdy is saying, Vitalik.
Oh my God, of course it's Ferdy. I know Ferdy.
Vitalik just recently criticized that in Link's wrongdoing, they did not get penalized. API3 solves that. Very probably Vitalik will endorse API3 over Link. Boom. That would be like the best case. I'm such a fan of Vitalik. Like everyone on the team knows. Like I read all his blogs. I think he's such a great guy. If he endorsed us, I would be like over the moon. I think people honestly in crypto delegitimize the need for a face of the franchise, if you will. Like that's honestly some of the reason Ethereum's done super well. Like is because everyone can get behind a guy like Vitalik and like really rallies behind him, and he pushes it on.
Yeah, this is something I was saying to someone the other day, that I actually feel really grateful that he's one of the big faces of crypto, because think about how many scammers and psychos there are in the space. But one of the biggest faces is this guy, and like who's super smart. And I've never gotten the sense that this is a greedy guy who's out there for money or anything like that. Like he seems like genuinely, that this guy could have retired when he was 21, but he's still working on like, how do we make things better? How do we scale? How do we work on all these social issues? And I think we're really lucky to have him as kind of a face of crypto.
Absolutely. I agree wholeheartedly. So I've got a couple comments here. Back to some of the topics. I know we're not going to, I think we're at like 38 minutes right now. We're not going to spend too much longer here, but I have a question from Llama. He is saying, so the API 3 is a more direct Oracle API without going through the blockchain?
No, it's about like, it is more direct. So it's like, here's the blockchain and here's your API. Do you go through some third party to transmit that data, or do you just get the API to transmit the data to the blockchain? So it's more direct, but you're not bypassing the blockchain. It's about like, how do you transmit information to the blockchain? Does the API transmit it directly, or does it go through a third party?
Got it. Okay, a couple other comments coming through. Llama has a really a good situation that, well, not good, but pretty much a comment that says, "Hate to imagine if Chainlink ever fails. What would happen if Chainlink like completely like failed?" I know that's kind of a weird term.
I don't know what that means though. Like one of their price feed, like all of their price feeds going down at once.
Yes.
Like
Let's even throw that out there.
That would be a disastrous. Like I hope that doesn't happen. Like I'm not.
Yeah.
And also, I have to make it clear that I don't think we're direct competitors for many different reasons, especially with what they came out with white paper 2.0. Like I don't see them as some like direct competitor that I need to defeat. But I hope that all Chainlink feeds don't go down, because that would be terrible for the entire space.
Yeah, definitely agree with that one. On one of your recent interviews, you were talking about, I think Chainlink was brought up, and then another thing was mergers and acquisitions, and I think you had a really great answer to that, and you were talking about partnerships. Do you want to kind of break that down?
Oh yeah, someone you can actually look this up. Go to our YouTube. The last community call on the API3 YouTube, which was just me and Uger. Someone kept asking, they kept drilling, like they asked like 3 or 4 times, like, do you have anything in place for mergers and acquisitions? What if Chainlink buys up like 50%, like 70% of the API3 tokens? And what I said was, I'm like, yes, it's possible. Like anything is possible in this particularly crazy space. But the space hasn't worked that way so far. I can't think of an example of a DAO that acquired another DAO by this giant token purchase. It's kind of the same as like Bitcoin. Like the idea of, if you hack Bitcoin, the Bitcoin you receive pretty much devalues to zero, because now Bitcoin is hacked and no one has any faith in Bitcoin. It's the same thing. Like if you're some DAO that now acquires another DAO, it's like, it's so gross. Like I don't, like to kind of aggressively acquire another DAO, like that's going to look really bad in this space. And what's cool about this space is like something Vitalik talks a lot about is like social consensus. It's like, you can fork a network or whatever, but like, are people going to use it? And it depends on, do they align with what the kind of values of the fork are? And I think someone that's going and cannibalizing other projects isn't going to do very well in this space, because the space relies on social consensus.
Yeah, I'm trying to think of the comment that you just made about maybe examples in the space where this has happened. There was some, I think, drama of Sushi and Uni, like the Uni maybe buying up a ton of that, or the other way
No way.
around.
Okay, I haven't. Is this like a rumor, or is this actually happening?
I remember when it was happening, something. God, it's been so long. It was somehow in the back of my memory that this was actually happening. And then I know Olaf was talking about mergers and acquisitions from Polychain Capital. Olaf Carlson, he was talking about M&As. And then I think a lot of M&A maybe happens at the DApp level. Like you almost have Polkadot saying, "Hey, why don't you come over here instead of being on another chain?" Maybe that's happening more often because they have funds to throw at dApps to kind of build on their chain. But it's a cool conversation.
Yeah.
Yeah.
Like I said, like I can't tell you something will or won't happen. Like who in crypto can tell you that? But I just, from what I've seen so far, I don't think we're in the short term going to be threatened by some like hostile takeover by some other project or DAO.
Got it. Okay, awesome. Well, we kind of made it through the entire conversation on API3, and you did a great job explaining decentralized APIs and oracles. What is something we maybe didn't touch on that you want to kind of cover before I kind of jump out and maybe ask more kind of outside API3 questions?
I'm actually excited to see what you want to ask. Like, I have nothing off the top of my head. I don't know if you want to take questions from the audience or whatever you want.
Yeah, that's a great point. So I'm going to actually ask the audience here, if you guys have any questions for Sasha, please drop them in the chat now. I can get them over. Again, we have like 5 to 10 minutes left here in the interview. One of my main questions was, again, listening to one of your previous interviews, you were talking about building smart contracts and how data science is something people don't think about when it comes to building smart contracts. What does that mean?
Oh my God. Yeah. That's such a good question. I haven't been asked something like that. But my general sentiment is that there aren't enough statisticians and data scientists in the crypto space. And I think that has had a large influence on a lot of things. This is such a tangent, but I think EIP 1559, that whole debate would have looked very different if there were more statisticians giving their input. I think people from outside of the space think that smart people are all the same, and they're not. Like, people that are good at math aren't necessarily good with computers. People that are good with computers aren't necessarily good with statistics. And the space has mostly programmers and computer people, which is great, but not a lot of data people. Like, you need to like, with something like EIP 1559, you really have to look at network statistics and data about how the network's going to react. You can't just do game theory.
Yeah.
Like, you need to look at the network. And I should plug someone. They're not really a friend, but there's someone I follow on Twitter called Bits Be Trippin'. He's an Ethereum miner, and he was actually there during the EIP 1559 community call, and he was like pretty much one of the only people there that was kind of against it or against aspects of it. And he was just kind of rattling off network statistics, like this is what happened in April when this happened. This hash rate went down last year. Like, he knew all the stats and was like, you guys aren't looking at the statistics. Like, you can't just do game theory and some theoretical model. Like, you need to look at the stats.
It's almost
go ahead.
No, go ahead.
No,
it's almost a maturity of the space, right? Like, in 2016, just kind of throwing out the game theory, the space wasn't that big and it wasn't that mature. So you didn't have to do things like that. It was just experimentation, where now it's like, hey, look, we have all this data. Like, let's just take a look.
Yeah, absolutely.
Yeah, Crypto Stamina saying data science became more sexy during COVID. We definitely, I don't know much about data science. Again, like, I'm not a statistician. What is something like the stats on, I guess, in that example that you used with EIP 1559, like, what would the data science show us that maybe people who would just want to work off game theory, kind of wouldn't see?
So the main thing, I'm actually really excited we're talking about this because it was such an interesting thing. And I wish I was part of that conversation, but no one's going to call me up, like, ask me my opinion. But so the issue, so it was so poorly explained. It was so poorly presented in the media, or like crypto Twitter, as if like miners are so greedy. Miners are so greedy. They're mad about EIP 1559, which is super ironic given the fact that the space is filled with, degens. It's like, you can't, like, degens calling miners greedy. It's extremely ironic. So it's, for people that don't know, EIP 1559, it burns all, man, I wrote an article about this. Why am I blanking? All the fees are burned. There's a flat fee. There's a flat fee for a transaction. It's burned, and you can optionally tip a miner. So right now, miners make all of the money. Whereas EIP 1559 is there's a flat base rate that everyone pays, and if you want to tip to speed up, you can do that, and the miner gets the tip. So now miners are going from actually having like full salaries or whatever to being just tips. And they're obviously pissed off. And then everyone kind of that's pro EIP 1559 is saying, like, I mean, not everyone, but the general sentiment is like, oh, it'll work out. Like, there's always an incentive to be a miner. Like, even with tips, there's sufficient incentive. And it's like, this keeps getting pushed. But what the guy was saying, I can't remember his real name, Bits Be Trippin', but he was saying because he follows the network, and he's like, anytime like Ethereum price drops, you can see hash rate drop. You can see people selling off their mining equipment. Like, anytime like there's a significant change to miner revenue, there's a change in hash rate and how many miners there are in the network. And he's saying like, there's going to be a real security issue when we swap. I'm not saying this is true or not. This is kind of a sentiment from miners and miners that have like a good opinion, is they're saying like, once the system switches from what it is now to EIP 1559, it's going to be potentially dangerous because a bunch of miners are going to leave the network. And this is such a good point. There's going to be a bunch of, like, let's say you're like, I'm a miner. I have a bunch of, I have a bunch of CPU power, GPU power, whatever. And you're like, I'm not going to mine anymore because it's not profitable. You have an incentive to actually start like MEV hacking DeFi, like having like all of a sudden a bunch of miners leaving the network. A bunch of miners leave the network. Now you have all this compute power. What are those people going to do with, you know what I mean? Like it's like, and he pointed that out and it was just completely ignored. And it's such a good point. If people are like, I'm not going to be a miner for tips. What are they going to start doing? I'm not suggesting miners are that, like some people are actually moral and aren't going to do that. But like having a bunch of hash power laying around is dangerous.
Yeah, could they potentially, I know we're moving to proof of stake a bunch here over the next year and all these with different projects. We see the rise of Matic a little bit. Would they move to a different network, or could that be a scenario? Like,
it's one of those things. These are such good questions because people in crypto aren't usually talking about except with the new MEV, miner extractable value, that's been kind of a topic. But for the most part, people that are building dApps don't talk about miners and what their interests are and what their concerns are and what their incentives are. So I don't know, like I'd have to talk to miners, but yeah, if you've got a bunch of hardware laying around, you're going to find a use for it.
Interesting.
Or you're going to sell it. It also depends on like what the demand is for hardware equipment. Like if it goes up, you'll sell it. But if you bought a bunch of equipment during the bull market and you're going to sell at a loss, you're going to find something to do with that compute power. And I think it's an attack. It's not an attack vector, but it's a little bit dangerous. So what I've told people, I'm like, when Ethereum switches to EIP 1559, I'm not going to make any transactions. Like I'm going to wait before I make any sort of transactions on the network, to be honest.
This is a really fascinating discussion here.
You should have talked about EIP 1559, not API3.
Well, that will be in. I'll change the title, and we'll actually have a back end here. So one of the things that you were mentioning again, like that plays into this convo, is consensus, right? With having that hash rate continuously increase. Although, I mean, you could have one entity increase that, but usually a rise in hash rate, right? If it's decentralized, it's increasing the security of the network. So does security almost, when a good chunk of ETH miners are leaving the ecosystem, you have security actually taking a hit as well.
Yes, exactly. It's and I was kind of surprised that the debate around EIP 1559 wasn't. I don't know. I was kind of disappointed with the crypto space. I like the crypto space a lot, but I just felt like, miners are greedy. They just want money. Let's ignore them. It's like and this guy, I'm trying to remember his name. It's Bitsby Trippin on Twitter.
Right, I'll try it.
Yeah. I'm like I said, I'm not friends with him. I just follow him, and he's given me an insight on miners.
Michael Carter.
That I haven't gotten elsewhere. Did you find it?
Michael Carter.
Yes, Michael Carter. What was your question before this?
No, I was gonna say it's a give and take. I don't know. Again, I'm not as in in the Ethereum ecosystem as you are, but I'm pretty sure from my rough knowledge here that Vitalik was pushing EIP 1559. So that's the give and take. Yeah. I feel like when Vitalik says we should do this, most everybody is gonna say.
Yeah. I actually have another point. Oh, I wrote an article about this, so let me shill my article. If you search EIP 1559, an economic analysis, I did a summary of like a 50-page paper from like an economist about EIP 1559, and he said that there's like alternatives. There are equally secure and potentially better. Fee is burned, and that's necessary. It's extremely complicated, but it's necessary to get the game theoretic mechanism. But so you can't give the fee to the miner, but you don't necessarily have to burn it. You can actually give it in the future, like I'm trying to think of the word, like the next 10 blocks, you can distribute the thing that you were supposed to burn in the future. You see what I mean?
Yeah.
So like there's alternatives to burning, but like no one's really talking about these alternatives that are potentially better and potentially more that are potentially better and more appealing to miners. And I feel like this kind of miners have, I don't like the fact that they get kind of ignored when we talk about.
Sasha, this has been an amazing conversation. You can't see the screen, but I have your blog post and I pinned it in the tweet and I've got it up on the screen here. So you're a rock star at a lot of this. This is
Thank
awesome.
you.
So
Thank you.
yeah, absolutely.
I think it's because I'm like a hippie. Like I'm not trying to get into Twitter arguments or anything. I'm just like, there's something that needs to be said, like, and there needs to be a wider conversation. And sometimes people can get distracted with doggy coins when there's more important things to be talking about.
Yeah. We need more people like you in the space for sure. So
there's a lot of us.
Yeah,
there's a lot of us. I just I don't know, like I have these kind of conversations all the time with people. Like this is what people in crypto talk about.
Yeah.
Because no one really knows everything and no one really knows what's happening, but like you don't really see these discussions, or at least like it seems like people aren't interested in these kinds of discussions.
Yeah, that's where I kind of lost a little bit of respect for Elon Musk and all this. And I do want to, before you leave, I do want to get your take there. But I feel like Elon's not, like, he could use his powers a little bit better, but maybe that's just being nitpicky. Like, I know he's talked about renewable energy and things like that, but he really drives that Doge train, you know, so it could be used in a better way.
Oh, I'm so glad you're asking for my hot take, because I've been asking this a bunch of different people and everyone seems to have a different answer with like, what's Elon thinking? But my opinion is, I know that guy is extremely intelligent. Like I have seen people be like, oh, he's not actually that smart. It's like, come on. Like that guy, like Elon Musk is extremely intelligent. And some people are also like, oh, he's just a shit poster. Like he's just like sitting in bed doing whatever. And like, I don't know, like a guy that runs like those kinds of businesses isn't just, you know, shit posting for no reason. I think there's something else going on, not to sound like a conspiracy theorist, but like, I think there's some sort of like, there's some long-term thing that he's trying to do. I don't know what it is. I was actually thinking, I actually posted about this on Twitter. I'm like, I think he wants to run a blockchain on Starlink. It makes sense, right? It's like some renewable blockchain thing, like completely like FUD the entire system and, you know,
have the answer.
Yeah, have the answer. It's like, I really think that people shouldn't underestimate people like Elon Musk and just think they're idiots, because they're not.
Yeah, absolutely. I would agree with that. If someone thinks Elon Musk is an idiot, I think they're not looking deep enough. So totally true. This has been one of the best interviews on the Layer 1 podcast.
This was so fun. Have me on whenever. You were asking such good questions. I think you said in the beginning that like you're kind of a noob or whatever, but these were the fantastic questions.
Absolutely. The last, I guess I do have a book recommendation question, but one last question here, because on top of being one of the best interviews here that I've had on the Layer 1 podcast, you're actually the first female that I've had on the Layer 1 podcast, and I've been doing the interviews for a minute.
Thank you. Do I get an award?
Yeah, I can send you some Doge, but that's about it. So what is it, like, take me through that, just being a female in the crypto space, like, and what that looks like in the future. Do you think, go ahead.
Yeah, you're the first person to ask me that, but keep in mind that like I studied computer science in school, and I worked as a software engineer. So like being around dudes all the time is like something I've been doing for like 10 years.
Yeah.
Like, so this space isn't something that's like unusual. And I'm not saying that's like good or bad. It's just like, it's just something I'm used to. It's not really something I think about very often. My experiences in crypto have been overwhelmingly positive, and I'm not speaking on behalf of all females in the space, but like my experience has been really good. And yeah.
Awesome. All right. Thank you for that answer. And then my last question, book recommendation, could be crypto, could be non-crypto. Can't wait to hear this answer, by the way.
Oh my God, dude. I read a lot, not to, you know, pat myself on the back. Okay. I got it. It's a Soviet math textbook from like the 1950s, translated into English. It's called Mathematics, Its Content, Methods, and Meaning. And it gets into it was a book meant again, it was originally written in the Soviet Union, but there's a really, really good translation by Dover Publishers. And there's a chapter, there's these really short chapters where they tell you about advanced mathematical concepts like like calculus, probability theory, advanced statistics. And it's written for smart people that don't actually know math. Or not necessarily know math. Like it was written, they said like we wrote this for the intelligentsia. So it's like you don't necessarily have to be a math person or engineer, but it's written for smart people that want to know high level what things like group theory, what calculus is, like what these extremely advanced mathematical concepts are in like 20, 30 pages. Like why is this useful? Why does this exist? I've never seen anything written like that in my life. Just because people think like there's no way I can read about group theory if I haven't done an undergrad in mathematics, but like these things, if you're clever, you can understand high level. So mathematics, it's content, methods, and meaning.
So if I hopped into that book, it wouldn't be above the head for even myself just to kind of like see what you're talking about.
Start in the beginning though.
Okay, awesome. Yeah.
Don't go all the way to the back.
Yeah, I would not put myself in the class of intelligentsia. So
No. It's just it's like anyone, like I can tell talking to you that you're a clever guy. It's like you have a bit of street smarts, like you're logical, like you can it's not, I'd recommend the book. Like you might impress yourself with what you can understand.
All right, awesome. Okay. Well, this was a great interview. API.
This was so awesome. You're an awesome interviewer. Thank you.
Thank you so much for stopping by. You know, honestly, when I first looked into the project and was getting involved in kind of the pre-project stuff or the pre-production stuff, I was a little like, hey, this is a little above my pay grade here. So I appreciate you kind of taking me along and explaining everything you did on this interview. So did a great job. And any links as far as maybe websites or Twitter if you want to throw out?
Yeah, just Google API3 if you want to read about us. Our Medium is, in my opinion, really good. Me, Burak, and a couple of others. Like we started, it was mostly me and Burak writing, but there's other people like writing blog posts, and we really care about writing good things. So I'd say our Medium page, like just read through tons of blog posts. Please read through that. I created a Twitter a couple months ago because you have to if you're in crypto. So it's my name, SASAMILIC, and then 33 at the end.
Got it. Is Milic Croatian?
Yes, I was born in Bosnia.
Bosnia, okay.
Close to the same thing. Yeah. No, it was the same thing when I was born.
Got it. Okay. All right, so we are going to head off here. Thank you guys for stopping by. A lot of really great comments here. They're saying,
I can't wait to read them. I can't wait to read them after.
Yeah, wait about 30 minutes. It takes a second for it to populate, but fantastic interview. Awesome interviews being thrown out there. Legit interview. So everyone was enjoying this, and I definitely enjoyed it myself, Sasha. So we will have you back on the channel anytime. And
absolutely.
Yeah, look forward to following the project. Thank you.
Thanks. Are we